Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about the upcoming Fed decision. Should we be long right now? Should we be short right now? How should we play this massive fundamental event that is coming into Bitcoin? Today, we're going to be talking about the Fed meeting, what is likely to be said, how it's most likely going to impact the market, and then we're going to use some technical analysis to figure out whether we should be long or short right now, what conditions upon which we would actually enter into a trade, how should we trade the Fed meeting, should we trade the Fed meeting? We're going to talk about all of this and more in today's video. So if you're interested to see where Bitcoin is going to go over the next few weeks, you have found the right piece of content. So without much further ado, guys, let's go ahead and dive right on into it. Major news coming up tomorrow. The FOMC is going to be meeting once again and announcing to cut rates. We have basically a 98% likelihood that rate cuts are coming. Jerome Powell has more or less come out and said that there's going to be a rate cut this meeting. And also the next meeting in December, we basically have a guarantee of a rate cut as well. Overall, we are watching the United States Federal Reserve track with something called the two-year yield. If you look at the two-year yield, what you're going to find is that the Federal Reserve is trying to bring rates down towards about 3% right now. Right now, they're around 4%, so they're bringing these rates down because the Federal Reserve is right now more concerned about labor market conditions than they are about inflation. The Federal Reserve has basically given up on target 2. They've more or less admitted that they've given up on target 2%, which good news for any of you guys that are in hard assets like Bitcoin. They're going to fly even harder. Bad news for you if you've got a bunch of cash and savings and no investments. But right now, the Fed has shifted its focus over in the direction of the labor market, which actually makes some sense that they're concerned about this because we have announcements that many different major retailers are in the middle of enacting massive layoffs. Amazon, for example, is expected to lay off over 30,000 employees. Kohl's, Walmart, a bunch of different companies are expected to lay off tens of thousands of employees. All of the expected layoffs over the next month or two could total over 100 to 200,000 jobs, which isn't a huge percentage in the grand scheme of things, but it is indicative of the growing difficulties that we're seeing in the labor market. So we're almost certainly going to see a rate cut. But the real question is, how should we trade this? How should we trade this? Should we trade this? What should we do about this? So let's go ahead and set up our technical analysis, make sure we have all the appropriate context so that we can find confluences to try and answer the question, should we be short or should we be long, and under which conditions should we enter into one of these trades? All right, the first thing we need to do is take a look at the hour chart because this would be an hourly chart trade, and we want to make sure that we have the full context of what's happened. The first thing is right now Bitcoin is in an ABC bounce off of the 1, 2, 3, 4, 5 corrective wave that we saw drive Bitcoin down to 103,000. We saw a perfect bounce off down here right at 0.618. This is where we bottomed at 107,000, which means that in this market, 0.618 seems to be being respected. And if we draw a Fibonacci retracement off of our overall backtest, you'll see that 0.618 falls perfectly right here in between the top of the 4 and the top of the 1 wave, which means that $117,000 is going to be a major level of resistance. And this is actually something that we see corroborated in the analysis, because if you look over here at the liquidation heat map, what you're going to see is that there's an enormous amount of short liquidations that are sitting at $116,500. Many of these people who are in short trades and have their short liquidation on this side of the 0.618 are fools, and they will probably get hunted. If those short liquidations were up here at 118, just another $1,500 higher, there's a decent chance that Bitcoin would reject off of 0.618 and drop lower. And then this overall movement would be an A, B, C corrective wave that could drop us down significantly lower. But the fact that we have a lot of short liquidations sitting right here that almost got triggered but didn't quite does give me some confidence that Bitcoin is going to come up here to hunt those short liquidations, hit that liquidity. But the issue is, I don't necessarily know. I'm not necessarily confident that you're going to see Bitcoin stop at 0.618 because once you hit all those short liquidations, that's going to trigger a lot of buy-side pressure, which will probably send Bitcoin over 0.618. And if so, if we start closing hourly candles up here, that's probably going to send Bitcoin back to all-time high. That is overall our long scenario. Bitcoin hunts these short liquidations. The short liquidations drive us up to 118, 119, and at that point, that is a volumetric confirmed breakout. Breakout means we're getting above a level. Volumetric means there's a lot of volume, a lot of Bitcoin changing hands. All of these shorts getting liquidated would be the volume that you would need for a volumetric confirmation breakout. And if that happens, once again, you're probably going back up towards all-time high. So your long position might look one of two ways. Either one, you're going to front run the Fed meeting and you are long right now because we've got this uptrending level of support. And if you're longing Bitcoin, you're basically assuming it's going to hold. So let's just say you're in at market price, which is currently $115,200. You set your stop loss right here, just a hair below our bottom. This gives us our standardized risk, and then we're going to look and see if we can accomplish at bare minimum a 3-to-1 risk to reward ratio, and we could do that by moving our stop up here to just shy of 0.786. On top of that, if we moved our stop up here to just shy of all-time high, that moves our risk to reward up to 6. So what you may end up doing on the long is you may say, I'm going to take 50% of profits right here. Take 50% of profits right here, just shy of 120. So we're going to say, I can't remember, does this have a tool? I think this might, no, it doesn't have it over here. So we'll go ahead and say, we'll go ahead and just set a level here. Say at 119,800, right? That's 2.5 R, not great. Let's say, yeah, at 2.5 R, I think I'm okay with that. At 2.5 R, we'll take, 50% off the table to take some profits. And then we'll let the other 50% ride, right? And then we'll take the other 50% off the table up here at the take profit, which we will probably want to put just below this high right here. So we'll put it up here at 125,300 or so. That'll give us an overall risk factor of 5.43, but because we're taking 50% off half of the way up, that means our overall R factor will be 75% of that, which means our overall R factor on this trade is roughly 3.8 R over 1 R of risk. Okay, so that's how we would probably set up the long trade as an entry right here. The other way you can set it up, but the far more risky way of setting it up, is entering tomorrow on the Fed meeting, on the Fed decision, when Bitcoin's already up at 117. At this point in time, you're going to have to move your stop loss significantly higher to get the exact same risk to reward ratio. So you could go ahead and do it like that. So we'll just go ahead and say that this is our current setup. Tomorrow it would look a little bit different, obviously. Now, why would you do this? The reason that you would go into this long is because you are anticipating that the Federal Reserve is going to say something such as this. We are ending quantitative tightening. He might say the actual word quantitative tightening. Jerome Powell may instead use the language that sounds a little bit like this. He may say, we are pausing the shrinking of the balance sheet. The balance sheet is the thing that we're talking about when we talk about quantitative easing and tightening. So if you hear him talking about pausing or growing or an end to the shrinking of the balance sheet, then this is the kind of lingo that's going to lead you to the understanding that what he's talking about is the actual quantitative tightening. If he says anything about QT ending, then that's where you would probably go long, because Bitcoin would probably actually rally through the Fed meeting, whereas opposed to in the past, Bitcoin has actually crashed as a response of the Fed meeting. And the reason that we dropped here would probably because the stock market dropped. That'd be the long hypothesis. Now, the short hypothesis is actually very strong as well. And the short hypothesis goes like this. Bitcoin has a lot of confluences of resistance and historical reasons to believe that we're bearish. The first of which is that the actual point of control on Bitcoin sits right now. If we zoom in and just look at the last month and a half or so, the point of control right now is right above us. It's right above us. On top of that, the last time we saw a Fed meeting was right here, literally right there at the very peak, and Bitcoin immediately began a major downtrend. And obviously, if you had gone short right there at the Fed meeting, you would have done pretty well for yourself, right? Okay, so the other fact that you have to consider is that this flat level at 116 is right here below 0.618. And again, if you'll remember, we said that Bitcoin bounced on the A wave off of the 0.618 level here at 107. Obviously, this market at the time being is respecting lower levels on the Fibonacci below 0.618. Even over here, for example, when we saw this correction in this market, Bitcoin only rallied up to, the 0.382, because we were very bearish. So you can argue that the market is getting more bullish, and that would be accurate. But if you argue that the market is more bearish than it was a month ago, then you're probably expecting a high of 0.618 at the most. And this is the argument for a short trade. This is why you see people like James Nguyen going into a short trade. Now, he got a really bad entry, so he ended up getting liquidated. But the point is, there is an argument to be made that you should be short here. Here's what I'm going to do. I am not going to go short, because I still believe that Bitcoin's in a bull market, and especially on these longer term time frames where we're not just trading little 1 minute volatility, I really don't like betting against the overall trend. If we're in a bear market, I don't like longing. If we're in a bull market, I don't like shorting. So I'm really just kind of dialed in on, I'm looking for a long trade. I'm going to shave off that short trade because there's a possibility it could play out, but it just seems too risky for me. So really what I'm going to do is I'm going to look for the long trade. And what I'm going to do is I'm going to say either one, today, if I get a really good entry, if Bitcoin drops down here to like $14,000 or something, and it's very, very, very far down here, like down at 14K, that's where I might enter into a position because I can set up my risk to reward ratio at like almost 10 to 1 based on what I think would happen. So that's where I might enter the trade today. If I don't get a really solid entry today, I might wait tomorrow for when the Fed is actually, when Jerome Powell is actually speaking. And at that point in time, that may be where I enter into a trade if I can get good entries. At this point in time, unless I get a really, really, really solid trade before Jerome Powell begins speaking, I'm probably not going to trade this because we just don't really know how the market's going to react to this. This is the first time that the Federal Reserve has ended quantitative tightening in, oh goodness, let's see, in 6 years. The last time they did it was in 2019. So we don't have a lot of data to go off of to see to know exactly how they're going to respond to this. But overall, I would say that a long trade is the safer bet so long as you're using proper risk management and so long as you understand that tomorrow is going to be an extremely volatile fundamental event, which is the Fed meeting. And this is the kind of strategy that we are running. And even on stream today, we ended up getting a 4R. We were doing some paper trading here on stream just for fun. We managed to trade this leg up and get out at a decent time. We got out a little bit too early, but we ended up getting some good risk factor. Then we ended up shorting down here, and we actually ended up succeeding. For all of you guys who have eyes to see, I know this is kind of complicated, but if you can pause here and see what I'm looking at, you can see we ended up we got stopped out here for -1. We had a positive 0.75 over here, and then this short trade ended up running to full profit, which was a plus 3.23. So we ended up actually getting plus 4R, which means that if you risk, let's say $100, if we risked $100 on that trade this morning, then that means that would have equaled $400 of profit. So that is what we are doing. We are using our technical analysis. We're using proper risk management, proper risk mitigation, proper entry, exit, and stop positioning to generate systems and strategies that help us to make money in the market. So if you've not already, make sure to stay tuned for more content like that. And I also want to show you a great place where you can actually do this trading, and that would be none other than FOMC. If you guys have not already signed up for FOMC, I'm going to give you 2 reasons why you should. Number 1, they are just a very safe, very successful platform. They've got so many users. They're one of the fastest growing exchanges in the market, and the reason for that is because they take good care of their users. So many people on so many different exchanges got completely screwed over 2.5 weeks ago when Bitcoin crashed through the floor because their stop losses didn't trigger, so they got fully liquidated, which is not acceptable at all. And so FOMC had perfect uptime. They had perfect trade execution. Everybody's stop losses triggered exactly where they were supposed to be. So people were taken good care of on FOMC during the worst trading debacle in the history of the Bitcoin and cryptocurrency space, where a lot of exchanges really suffered. FOMC did a great job. The second reason you want to sign up for FOMC is because I'm actually working on a trading course right now to explain a lot of these strategies that we use in our trading. And you're going to get that little miniature trading course for free if you sign up for FOMC and deposit $100. So make sure you go to the first link in the description box down below, sign up for FOMC, deposit $100, and when that trading course comes out in the next 2 weeks or so, you're going to get it for free. It's completely for free. The only way to get this course is going to be to sign up for FOMC and deposit funds. So make sure you sign up for FOMC, deposit funds. Once that trading course comes out, and through our content here on YouTube, learn to trade, and FOMC is going to be a great place to do that. You're really, really, really going to like this trading course. We shot the first video yesterday. We got the next several videos coming out pretty soon. It's amazing. You're definitely going to want to see it, and I cannot wait for you to see it. So overall, here's our rundown. Here's our market recap. There is a very serious possibility of a major breakout taking place on Bitcoin over the next few days as a result of Jerome Powell's speech. The most important thing that we need to keep in mind is we need to keep the risk mitigated as low as possible, keep the reward as high as possible. And the way we do that is by properly positioning our exits, our entries, and our take profits based on strong technical analysis, based on strong confluences of data, based on strong narratives such as Fed meeting can crash market, quantitative tightening ending can rally the market, based on our predictions about whether or not those things are going to change. We can put our win rate as high as possible. We can keep our risk to reward ratio as high as possible. and thereby start extracting money out of the market through our trading. So if you want to learn more about that, make sure to hit that like button and subscribe to the channel. Hit the post notification bell so you see every single piece of content. Don't just watch one of our videos here and there. You need to watch all of them, because there's some things we're going to talk about on one day that we're not going to talk about on another day, because if I just repeated all like 30 or 40 major talking points that I have in my head, you would the videos would be 3 hours long every single day. So there's some things we're going to talk about on one day. We're going to talk about something different on another day. We're going to talk about something different on another day. For example, we're not talking today about the digit cycle, which is an overall cyclical indicator that I'm working on that is predicting $1 million Bitcoin within the next 3 to 5 years. We're not going to really talk about that in today's video, but in the next video, we might talk about that. So make sure you hit the subscribe button, hit the post notification bell, and watch all of our content, because we have so much value to provide to you. And I genuinely believe by interacting with our content and learning from it, you're going to be better off than you were when you met us. So make sure that you hit that like button, subscribe to the channel, and stay tuned for more content. I love you so very much. And before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.